Well, yeah, I did. I guess one of my first videos that I've done in a long time was just a quick shot last Friday, and it's gotten a pretty good reception. I posted it on X. Had not had an account on X. Had 0 followers at that time, and it looks like a few of you guys have found me. So I appreciate that, and wanted to bring out more content. And for those that may not be as familiar with who I am or the companies I work with, I've been in the industry meaning the precious metals industry, for quite some time. 16 years running now, founding and running Scottsdale Mint, and I'll get into that in a minute. But even before that, I came from the hard rock mining. I did risk management and did a lot of the risk management insurance for some of the world's largest gold, silver, and copper mining companies. So basically, I don't think I was the smartest guy in my 20s, but I was really sharp at learning that people had problems and how do I bring in solutions to do risk mitigation for mining companies. So whether they're transporting their gold or silver out of Mexico or Bolivia and getting that to a refinery somewhere in the world safely, to handling trade credit, political risk, did crazy stuff in various Latin American countries, construction projects, environmental issues, and I fell in love with the metal space. And so that, as we hit the financial crisis in 2008, the world changed at that point, right, in the United States, really affected a lot of things. And it was hard to get precious metals. It was hard to get silver at that time. And that's when Scottsdale Mint was birthed. And used a lot of my relationships in the past to put that company together. And it started in my guest bedroom, so in 2008. Didn't know where it was going to go. And if I fast forward, over the last decade plus now, we now manufacture legal tender coinage of gold and silver for roughly 20 foreign central banks and nations. We do stuff for private banks. We supply in the hundreds of wholesalers all around the world. We supply both investment product, collectible product, gift product. We do licensing products. We produce a lot of product that you may not even know that we produce. So I'd say the vast majority of the industry, we probably do something for them. So you might see people on TV promoting a product, and a lot of those, it doesn't have our name on it, we produce it. And in 2022, I actually moved my family to Wyoming. And so what was that all about? Josh, you've got a company called Scottsdale Mint. That's right. Wanted to take the company to the next level. Be in a position in a place that was strong, sound, and Wyoming represents, to me, it's like going back in time. It's kind of what America used to be. Wyoming has problems, but it has less than most of the other states. And Wyoming is the #1 ranked sound money state. So that means for a business, it just means that we get to have consistency. So I know a lot of the politicians, and I don't have to get political. And frankly, they're very much supportive of minerals. This is a huge state for energy. It's the second largest energy exporter in the United States outside of Texas. It is huge in natural gas, oil, wind. It's the #1 uranium state, the #1 coal state. It has lots of power plants. It has the next nuclear, first nuclear plant ever. Bill Gates and Warren Buffett are building here in Wyoming. It's got a new nuclear uranium enrichment facilities being put together right now, and also rare earth minerals. You're going to hear a lot about this going forward. So obviously there's a huge arms race. We'll cover that later on for critical minerals. And Wyoming has a lot. And so there's actually 2 pilot plants being produced and put together here in Wyoming right now. One is basically nearly done. And so Wyoming's going to be a very critical place. So I moved the company here to Wyoming, and it took about 2 years in total. So we're still in some construction. Our facility here, it'll probably end up when we're all done, somewhere between 70, close to 80,000 square feet. So basically the majority of the team have moved up as of last fall. So while we appreciate our roots in Scottsdale, and what a fantastic place that is, we're very much excited to be in our new home in Wyoming. One of the things that many people don't know is I also put together a new vaulting company, and it's a lot different than the others that are out there. And It's not only a vaulting company, that's called the Wyoming Reserve, but it's also a fund. And so it has potential capital gain deferment and capital gain price appreciation tax-free for investors that own stock in the company. The company owns precious metals on its balance sheets, 90+%, and it manages and runs a vault that's high security in an opportunity zone. So it's a pretty interesting company that's going to be getting into art storage, probably wine collection. It's gonna go interesting places over the next few years. So very excited about that as well. So as I talked about last Friday, what's going on with EFP, exchange for physical premium. Essentially, there's two major markets, and I'll kind of explain that. So you've got the banks, and then you've got the buyers of the metal. And within the buyers group, we can kind of break it out to industrial, which would be someone who's using it for medical, for electronics, solar, those types of things. And then there's also investment in there. The investment community's been pretty quiet. A lot of investors were pretty heavy buying both silver and gold, during the COVID run. Very similar to ammunition and firearms, right? People go out, they buy up a bunch, and until they shoot through it, a lot of times there'll be kind of a glut of ammunition in the market. Precious metals kind of do the same thing. So we get these mad dashes towards everyone's buying it up at the same time. And then we go through periods of times where things are quiet. Well, there's a global liquidity shortage. So money has kind of come out of the system, right? The government's all printed money pretty heavily during the COVID years. And then we had a little bit of the roaring 20s and 1920s essentially occurred in 21 and 22. We saw Rolex watches and artwork, everything's sky high, and that's what we saw in precious metals. So not only did they go up, but also the demand was sky high. We've probably seen for the past year and a half, right, that demand has come down a little bit. However, something else has taken place is that's central bank buying. For those that aren't aware, we've had a couple years now in a row of record purchasing by central banks around the world. So again, quick recap, central banks, what do they have on their balance sheets? Traditionally, outside of their own fiat currency that they create, they only have gold. And so that's very interesting. So they're literally, every month, they're issuing new paper, and then they're buying a percentage. And some of these countries are buying it every single month, almost on a ratio trade. So we've seen probably since 24 to 25 the year, so let's say gold, we were pretty close to about $2,000 an ounce, and now we're up over $2,700 now a year later. That's been pretty much driven by central banks. The retail market's been left out. They're they're not really aware of what's happening in the world, nor are they aware of where it's going. I know some of you tuning in are, so I don't mean to broad brush everyone, but I am talking kind of in the general markets. There seems to be a big, obviously the cryptocurrency market, Bitcoin, right? It's a huge sponge. It's sucking a lot of the economic energy out that otherwise would have probably gone to precious metals. But we are seeing some of you guys out there are killing it and buying on a regular basis and building. But a lot of people have said, you know what? Gold's kind of high and silver's over 30. I'm going to liquidate because I might need some. And reality is precious metals are there for retail. It becomes a savings account, essentially. It's an asset that you get to build. And if you need it to buy a house for a down payment or something, totally understandable. But what's kind of happened is the pressures of EFP. And so when we realized, and again, if you tuned in on my last talk last Friday, tariff risk, right? So banks traditionally make a lot of money in the precious metals market, and they do some in the base metal markets as well. So they sell forward. So they sell a contract on the COMEX, and they go and purchase the physical metal somewhere else in the world, and they import it. And so that process takes more than a month on average. And as that material comes in, they deliver into that contract, and they take the spread. Seems pretty simple. So in a business, let's just say you're running a mega bank, and suddenly there is a risk, and that risk is called Donald Trump. So President Trump has been talking about tariffs for quite some time now. We don't know what he's going to do. So I'm not here to report what he's going to do or not. I'm just telling you what banks are looking at, what our industry is faced with. And so let's just think for a moment. You're going to import, so a large container of silver kind of caps out around 600,000 ounces. That's like your average container. So roughly call it $18 million. So can you imagine if you sold that contract forward and you're trying to make pennies or a nickel an ounce, and by the time that container arrives, you've got, let's say, a 10% tariff is slapped on you, you're hit with a $1.8 million bill. You are a trader at a bank. They are very risk averse. Do you think they're going to take that kind of risk? And so I would call that's picking up pennies in front of on a railroad track, and there's a freight train coming. It's not worth the risk. So they are pricing in a little bit of tariff risk. So we've seen probably over the last 30 days, going back to even early December, the EFP, the exchange for physical premium, being charged for those pulling out of the COMEX. We've seen that go up, and we've been ranging, I'd say on average, the bulk of it's been between 30 cents all the way up to over $1. And so we saw that late last week, right before the election. Well, Donald Trump is now president. He's been in office for a few days. Is it all cleaned up and over? No. We did see some of those EFPs scale back just a little bit. I think I was just looking here today. We've probably been averaging on silver Friday here between 50, 60 cents, about $7, $8 on gold. But again, back in the day, instead of 50, 60 cents, right, it was a couple cents. So we're talking huge implications. But another thing that hit, and it hit last week, is the lease rates on gold. So to give you an idea, the banks, they also like to make money on their precious metals that they own. So they do various financing facilities for larger, more sophisticated companies. And that's called repossession. So they buy back people's, whether that's jewelry or they buy back coins, and they do interest rates. And I'd say traditionally, low single digits, sometimes less than 1%. And suddenly we went from, let's just say 2-ish as an average. Everyone's a little different on what their costs are. But at the wholesale rate, suddenly we jumped to almost 10% per annum. So that's affecting the coin market as well. So a lot of people say, well, Josh, if all this is happening and all this demand is happening for the banks for the metal, why are the premiums going lower? Well, we've seen it. When demand is really high on the investment side, premiums go up because there's a variation happening here. So the reality is the precious metals are being pulled out of the hands of the coin shops, the mid-tier dealers, the larger dealers, and then they all are having to liquidate their holdings. So normal situation is customer walks in with an estate, my grandparents passed away, someone gets a bunch of gold and silver, they walk into a coin shop, they've got a couple $100,000 of that material. Oftentimes, those shops will just buy it and hold it and try to resell it. Well, if they get too much of it in, right, they need to sell that to a wholesaler. So as that kind of goes through the ladder, you see how it can kind of spread out and people get their cash back. But obviously, if you can hold on to that at a reasonable interest rate and get that financed, you're going to make a little bit better margin. Well, you can imagine if we had a 6, 7%, 8% jump in interest rate on gold overnight. I'll let you guys do the math. What is that? And now they're paying 10% or even worse for some of these guys on gold coins. So if you're not selling that gold coin, you're losing potentially 75 cents or more per day on that gold coin. And to give you guys an idea, the wholesale level is making dollars, like $2 to $5 to $10. I mean, that's kind of the wholesale game on a gold coin. So you can imagine you're burning fast. So these guys are going, hey, I got to sell to a bank, or they sell to a refinery, right? And the refinery then sells or melts that gold down and it's sold. But the refineries are really busy right now. And so some of you saw a report. I've got there was an X post that kind of blew up that I did just yesterday, talking about that the silver refineries are averaging in the zone of 3 months out. And that's the truth. How do I know that? So we refine. We don't refine in-house, but we outsource the refining. So a lot of our material, right, we got to hit our grades. And so our sweeps, stuff that comes out of our refractory, or out of our furnaces, right, we're doing this often. And so we're very well entrenched in the refining market. Also, we're buying product from the refineries. So this has been pretty interesting. The refineries have really had no metal to offer, what I would call the spot market or the industrial players who need material. They're feeding the COMEX right now. So they're so busy. And again, if you think about it, if you can buy scrap silver, have it sent into a refinery, and then they stamp it with their COMEX deliverable brand, and all you have to do is deliver that to the exchange and get your 50, 60 cents or $1 an ounce, that is crazy good money at that level. So these guys are booked out. I mean, they have contractual obligations to feed their customers all over the world with standard product each and every month, but then they've got a little bit of leeway, right, to kind of fill their refining capacities. But right now, the refining capacities are taken up by the banks. So this is a really interesting scenario where the coin shops, the coin wholesalers, right, they're getting gold eagles and maples in. They're not able to hold on to it because they can't turn it fast enough. So guess where that's going? It's really going into the bank's hands, and they're turning it in to COMEX deliverable gold and silver and delivering in. And a lot of people are saying, well, Josh, do you have any proof of this? And I'm like, well, you're going to see it. You're going to start to see it. It's already in the charts, people. It's there. Record deliveries. I mean, just this week, just a few days ago, over 2 million ounces of gold was delivered into the COMEX. I mean, that, you guys can do the math on this. This is quite big, and silver is coming over in droves. It's been imported into the U.S. Quite heavily, starting in December, and you're going to continue to see that over the next time because of this tariff risk. We can talk about, is Trump going to do tariffs? Is he going to put 25% on Canada and Mexico? Is he going to put 10% universally? Is he going to put an exclusion for silver and gold as a monetary instrument? Is it going to be just coins as finished goods? Or is there going to be an exemption for raw material? We don't have any clarity. And so back to that whole concept where the banks are driving it, and the coin shops, and I'd say the retail public, they're losing their metal. And so it is going to the banks. And that's not some conspiracy. It's just kind of where it's all going. So conversely, the metal is here in the United States. So one benefit for the United States is we're going to have a lot of gold and silver here stateside. So that's being done again because of the tariff risk. So over time, this is going to be an interesting thing to watch. So with a little bit of knowledge here, and I've had this conversation with people, and I'm not here to blow up any industry. But if you go back in time, there's been a few people that have tried to corner the silver market. The first person, the two brothers that everyone knows, was the Hunt brothers in the 70s. They did a pretty darn good job of it, and they drove the price up pretty darn high. But obviously, they got more than just a slap on the wrist, right? They got their silver seized, and it had to be liquidated. So that happened around, 1980-ish. But some people don't know that George Soros took a crack at it in the late 90s, maybe mid-90s. He took a crack at it. Apparently, he had less of a slap on the wrist, maybe a whisper in the ear, I don't know. But he was told to exit it. Apparently, Warren Buffett also watched what happened, says, well, maybe I could do it because the silver market's pretty darn small. It only takes probably a billionaire to throw a few $1 billion at silver, and now you control the market. So Warren Buffett attempted as well. That didn't go too well for him either, and he got a knock on the door by the CFTC, Commodity Futures Trading Commission. You can look this up. I think it was late 90s, 98, 99, something like that. And he was forced to exit his silver position. So a lot of that silver actually turned into what's now the silver ETF. So now as I'm bringing this story together, let's fast forward now 20 years. Where's all the silver going? Where is it at? I think a lot of you talk about, what's happened in the past, the retail market, the Wall Street bets, right? The silver squeeze that was going to happen. The reality was it's a journey. And so I think that was an interesting topic that, if everyone were to buy some form of silver, essentially that would put a strain on the system. Now, I'm not suggesting that we should do this, but I don't think people realize how fragile the market is right now. There is silver, there is gold, but is it in the right form, in the right jurisdiction? And right now, as you're seeing, there's a lot of short covering that has to take place, and they're doing it via physical. And so there is huge pressure. Well, can you imagine if our economy was booming right? And I'm already seeing some industrial customers, they're kind of hurting because they're having to pay way bigger premiums to get what I call tier one metal, so from the COMEX deliverable brands. And so now they're having to go to tier two. And I'm not saying that that's not good material, but these industrial companies, they have specs. And so in their labs, right, they're running specs. Some of the more well-known brands, the refinery brands, are easier for them to produce. They're sputter targets for semiconductor industry or medical industry. You can't have certain impurities in there. Well, when you pull metal off the exchange, you don't get an assay report. You just get random bars. You don't know what brand, what year. It could be 20 years ago. It might have tiny little traces of things that you don't want. So it becomes a big problem for the industrials. Now, let's talk about that other class of buyer is the investors, the retail. They're quiet. They're gone as of right now. Some of them feel like, hey, silver already hit it. It's a good exit point. Well, I'm here to probably say that this is probably the time where I'd say if the Wall Street bets people of the world were paying attention, and they probably aren't right now, they're on to other things. This is a very fragile time in the market, and it would be quite interesting to see what could happen if everyone kind of came in all at the same time and started gobbling it. Because then suddenly you don't have the financing issues at the coin shops because everything's just flowing, right? They're moving it back into the hands of the people, and now they're fighting, and maybe that industry is going to be outbidding the industrials or outbidding the bankers. So that could be an interesting scenario to keep an eye on. So as we think about why would retail want to buy right now, and I think this is another good question to start asking. You know, what is interesting is the bankers traditionally are some of the most benign predictions. They kind of say, hey, silver's at $30. We expect it to be 31 in a year. I mean, that's kind of what a lot of the forecasts have been the last number of years. This year, for 2025, we're noticing something different, and I don't think people are paying attention. Some of these banks are talking 30 to 40%. So I think groups like TD Bank, UBS, they've got reports out that you could go read. They're talking about, that possibility of being closer to 40 or more in silver. And you can also imagine if everyone was wanting and clamoring at the same time, it could be pretty interesting. What else could be going on? And, we are running a silver deficit. And what does that mean? We have stocks above ground of silver supply, and then we have got a below ground. And so there's essentially an inflation rate that takes place. And so only so much comes out each year. Well, when more comes out of the ground and is not consumed, right, it goes into the stockpile. But we've been running a deficit now for a few years, and it's probably going to continue. We're seeing advancements in technology, computer chips, AI, which is being way undercovered, solar. This stuff isn't really stopping, even if Trump may scale back a little bit on some of the new Green Deal stuff. The reality is AI and computer chips and cell phone advancement, all this stuff is using more and more silver. That deficit's probably going to continue. And what that means is if less silver is coming out of the ground, also due to, let's say, conflicts in Africa and other places like Mexico, it's going to be kind of interesting with some of the turmoil. So not only is less maybe being produced, but again, we're actually at a deficit. Where's that deficit come from that's being consumed? It's coming from the stockpiles. So we could see, thinning of the stockpiles and causing stress. And again, we're already in kind of a stressful point in time where there's just a lot of things happening all at once. So that definitely could be interesting. But there's also been some reports. I mentioned central banks have gold on their balance sheets. Well, there's discussion out there. Russia is talking about adding silver to their balance sheets. And I don't know. We've got an article that we just posted on our website just a few days ago. If you haven't checked it out, scottsdalemint.com. I believe it's /articles or check on the news pages. And we've got some discussion about this. So on it was, I think the topic was global tariff impacts on the COMEX and LBMA trading markets. And in there was a bit of a highlight, if I can get so here we've got this article you can find on our website here, and I'm going to cover it a little bit. And this gets interesting. So We just had Bloomberg with, I guess, Interfax had a story on Bloomberg noting how the Russian draft federal budget was just released, and something interesting in there. It detailed Russia's plan for buying precious metals in the coming years. But I would say, in addition to gold, which we all know central banks buy, the note mentioned silver. So what does that mean? Central banks buying silver. So what kind of percent are we talking? So I just throw numbers. Imagine if the BRICS nations start this. Is this a new trend? They put 1% of the reserves into silver. I don't know if there's enough silver to really provide too much here. So you kind of look at what's happening, and there is an arms race for minerals. And we're hearing a lot of talk about Greenland, Canada becoming the 51st state. I do realize there's probably a host of reasons, and one of those might be shipping lanes. Some of these countries have strategic locations, but a lot of it has to do with their minerals, their oil, their energy, rare earth minerals, the gold, the silver. There is a race, and I would say a lot of Africa has been locked up by China. They've kind of won the race over the last decade or so, gobbling up a lot of the contracts there. And so now people are looking for other places. So if now Russia, who was kicked out of the SWIFT SWIFT network of banking, right, they're trying to create something new. And we saw right before Christmas, I'm not sure who caught it, but Trump put out a X tweet post where he referenced that the BRICS should not back a new currency. He didn't say with what. I'll let you guys infer it. It is probably gold, but it also could be silver. So when you see these types of reports, they weren't well discussed, even though Bloomberg is a pretty big name. It didn't really go too far. Some are out there. Vince, who helped write this article, and you'll see more and more from him on our article. He has been probably one of the few that have really kind of dug in a little deeper. So I really think you guys should tune into what's going on. So if central banks are solidifying things for the future, I think they realize this is going to be a tough decade, right? There's some that talk about a great reset. I would probably enter if that means at a minimum, right? At a minimum, that could be a monetary change that could be coming. So the dollar's been incredibly strong. All right, and there's a lot of different scenarios, but it's only been strong versus other currencies. So in essence, it's a race to the bottom until they all have to be reset. And so we've seen gold and silver have been monetary instruments for thousands and thousands of years. So this is going to be interesting. Let's keep an eye on it, and thanks for tuning in.